Guys, in one of my previous gold buying videos, I mentioned that I didn't think it was a good idea for people to buy fractional gold every month. I said it's better that you just save up that money till you have enough to buy 1 full ounce because you can get it for a cheaper premium. And I also said, while you're saving up that money, it's not like gold is going to go up 40, 50% in a year. Well, gold went up 40 or 50% in a year. And so some people made comments saying, oh, see, gold went up. It's better to buy fractional and I don't want to wait. I'm missing out on all this money and stuff like that. First of all, if you're buying like 1/10 of an ounce a month, it's not going to be life-changing money whether you buy every month or you save up for 10 months and buy 1 full ounce of gold, no matter what happens in gold, really. But I want to show both sides of the coin, so to speak. So I'm going to show what would happen if starting in 2004, when the gold ETF started trading, if you bought 1/10 of an ounce every month versus if you bought 1 full ounce every 10 months for the last 20 years, would you be ahead or behind based on the price of gold going up or down or sideways? So let's take a look. So for the people with the comments saying, oh, I can't miss buying gold for 10 months to save up for an ounce. I'm going to miss these 50% moves and I could expect that I'm going to get these moves forever, right? Let's take a look at the chart of gold going back to 2004. So this is the gold ETF GLD, and you notice the price right now is 309. It represents 1/10 of an ounce of gold, even though it should be like 337 because gold is 3,370, something like that. But the fees over the years has eaten about 10% of the value of this ETF. That's why it's not exactly 337. But anyway, so it's a good approximation for the price of gold. So for people that don't know, gold peaked over here in 2011 around $1,900, August of 2011, and it did not recover that high solidly. Matter of fact, it went lower for all of these years and then went back to break even around 2020, and not till 2024 did it really break out of that 2011 range. So for all you people that are saying, oh, if I miss a few months of saving up to buy an ounce of gold, the gold's going to get away from me and stuff. Well, look at this. It was down, going down for like 6 or 7 years, or flat mostly for like 10, 11, 12 years. So for the people that just started buying gold over here in 2024 and only know this as their history of gold, right, going from 2000 to 3,300 or something like that, this is not going to be forever. It's not every year, okay? The same people that are saying by missing a few months, they're expecting this every year and they're missing out. Those were the same people that were over here buying at $1,900 an ounce when it was up from, $1,300, $1,400 an ounce the year before. So they're like, oh, it goes up $500 a year every year forever, right? So I'm just going to buy it up here. Well, then they got a reality check and they've been sitting on losses, or their gold was underwater for a long time till now. So, but let's see. Is it better to just buy 1/10 of an ounce every month, or is it better to save up that money and buy 1 full ounce every 10 months? Let's look at the data. So here's the monthly data from the GLD ETF, the open, high, low, and close for each month, right? This month is not finished July 11th, so it's still there, but July 1st, June 1st, May 1st, April 1st, all of that. So this represents buying 1/10 of an ounce every month, and this represents buying 1 full ounce every 10 months. Right, so going all the way back to November 2004, you'd be buying 1/10 of an ounce for $45. This is without the premium. Or if you wait 10 months, you can buy 1 full ounce for $434. Those were the days, right? So if you do that for 20 years, you end up buying 24 ounces of gold, right? 1/10 of an ounce a month, or 1 ounce every 10 months. And so if you did the 1 ounce buying every 10 months, you spent $31,552. And if you did the 1/10 of an ounce American Eagle, let's say you would spend $30,315, right? So that's about $1,200 cheaper buying the 1/10 of an ounce a month. But of course, there's premiums. And this is why I tell people not to buy the fractional, because the premiums are really high. And so right now, the premiums are actually low because so many people are selling gold that dealers are getting inundated, and they're actually melting a lot of the gold they get because they can't sit on it and wait for people to buy it, because people are selling way more than they're buying. So they have to sell it, so their premiums are coming down. So I took a look at some of the big online dealers like APMEX, Kitco, JM Bullion, SD Bullion, Bullion Exchanges, and looked at their prices for 1-ounce Eagles and what that premium amounts to, 1/10 ounce Eagles, and the cheapest 1-ounce bar or coin I could find on their site and what that premium is. Right, so I'm going off the price of $3,371. That's the price on APMEX right now. Some dealers show like $3,354, like Kitco or something like that, but let's just go with this price. So for 1-ounce Eagles, right, the price is anywhere from $34.66 to $33.92. That's a premium of like 2.82 to 0.62. Now, the average of these premiums is like 1.9%. So let's call it 2%. Like I said, these premiums are highly suppressed right now. The usual premium for a 1-ounce gold Eagle is in the range of 7%. Now, for the 1/10 ounce gold Eagles, these are the prices and these are the premiums. And these premiums average to about 18%. And like I said, the premiums are actually lower than they usually are. So you may be looking at a normal premium of more like 23, 25%. But if you shop around, you can find 13, 11, 10, maybe something like that. And then if you do what I recommend of just getting the most gold for your dollar, you would go and find the cheapest 1-ounce bar or 1-ounce coin amongst all of these dealers, or even your local coin shop or whatever, to find the cheapest gold you can get for your dollar, which is usually in 1-ounce denominations, right? And in this case, JM Bullion, their price for their 1-ounce Eagle was actually the cheapest gold on their whole site. So the cheapest gold in this case was the same price as the Eagle, which is pretty good, right? But anyway, the premiums here average out to about 1%. So now, like I said, this is not normal times. If you are in a situation where the premiums on 1-ounce bars or something is 1% and the premiums on American Eagles is 2%, get the American Eagles. But that situation doesn't last a long time. And so you can still get deals even when the premiums go back to normal. Maybe they're going to be like 2% or something like that. So let's look at what you would be paying for these ounces that you bought during kind of normal premium times, right? So the 2% premium, this is the kind of waiting for a deal or maybe secondary market 1-ounce bars with no plastic wrapping or something like that, just a bare minimum deal. You can get 2% premium sometimes, once in a while. More likely, it's about 4% premium for maybe a Canadian Maple or Krugerrand 1-ounce or a Pamp Swiss bar on sale or something along those lines, like 4%, right? The 1-ounce American Gold Eagle normal premium is more like 7%, right? And that's pretty much the max. You know, if you shop around, you'll find this in normal times usually, right? So that means that if you're buying 1-ounce gold American Eagles, right now you could be spending $32,183 for all of those purchases over the 20 years, buying 24 ounces, right? The total amount would be $32,183 if you're paying a 2% premium, but more likely it's probably going to be more like the 7% premium, $33,761. Now, for the 1/10 ounce American Gold Eagles, right, this is what you spent without a premium. Now, you're never going to get a 2% premium or a 4% premium or even a 7% premium when you buy these things. It's going to be more like 10% premium if you're lucky, and more like 18, 20, 25% premium in normal times. And that's why I say, do not buy these. You're better off saving up until you have enough to buy a full ounce, right? So the difference between kind of the normal premiums, let's say, and this is even probably low, 18% premium. So to buy all of these 240 110 ounces over the years with the 18% premium would be 35,772 versus normal situation American Gold Eagles 1 ounce to buy the 24 would cost you 33,761, right? So that's a difference of like $2,000 right there. Now, if you do like I recommend and buy the cheapest gold you can buy, no matter whether it's an American Gold Eagle, a Krugerrand, a bar, a 1 ounce bar, a maple leaf, even some kind of commemorative 1 ounce solid, 999 coin or something like that. If you do that and do it with a 2% premium, you're going to pay $32,183 versus if you just stick to buying the 1/10 ounce American Gold Eagles every month, you're going to pay $35,772. A difference of $3,500 approximately, which coincidentally is about a free 1 ounce gold coin right now. So in other words, if you did this 1/10 ounce over 20 years, you would have 24 ounces. If you did this buying the cheapest premium you could find, you would have 25 ounces for the same amount of money. So 1 free ounce of gold. Now that's just dollar cost averaging, just closing your eyes and buying the gold every month on the same day and all of that. If you are a little more choosy and save up your money until there's pullbacks and maybe when the gold silver ratio is out of whack or the gold Dow ratio or the gold oil ratio or something, there's always pullbacks in gold. If you were a little more choosy, then maybe you could buy when it's cheaper and you save up and you can buy 3 ounces when it's cheaper. And when it gets more expensive, you start saving up and wait for a pullback and buy more or something along those lines. So you don't have to just buy it every month like a robot or every 10 months or something like that. So for all of you people that just started watching ads on Yahoo about how Costco is selling gold and gold prices at all-time highs and you need to get it now and all of that, and all you know is basically the chart from here to here, go take a look at the chart going back some years, 10, 20 years, and you see it's not always taking the elevator up. A lot of times it's taking the escalator down for a number of years while it does nothing. So guys, I think the data shows that it's still better to just save up your money until you have enough to buy a 1 ounce gold coin, or just buy as cheap gold as possible when you have enough to buy 1 full ounce rather than buying like a 1/10 of an ounce every month. Now, if you are dead set on buying that 1/10 of an ounce, maybe if you shop around and buy 1 10-ounce bars or 1 10-ounce maple leafs or 1 10-ounce Krugerrands or something, I don't even know if they make them, but if you could buy the cheapest 1 10-ounce you can find that's very close to spot, maybe that makes sense. But here's another thing to think about. Over those 20 years, you bought 240 1/10 ounces of gold, let's call it. How did you do that? Did you have to get in your car and drive to the coin shop and talk to the dealer and wait online and pay and come back and spend all that time? That's if it's 1 hour every time you make a purchase, that's 240 hours versus if you're buying every 10 months, you buy one time, 1 hour, right? 20 hours, 24 hours over 20 years versus 240 hours over 20 years. What's your time worth as well? So let me know what you think. Have I proven my case that it doesn't make sense to buy the fractional, or are you still dead set on buying the fractional? The other argument for the fractional is that some people say it's easier to sell when they're selling. I don't know about that. I mean, if you're selling at a coin shop, if they take 1 10-ounce gold coins, they take 1 ounce gold coins as well. The only thing I will say is that if we ever get to the point of gold being like $10,000 an ounce, then you might have a problem with your 1 ounce coins, because if you sell your one coin and it's over $10,000 and you're getting cash, you have to file a cash report, or the dealer has to file a cash report with the IRS, which a lot of people would rather avoid. So let me know what you think. Are you still sticking to the fractional, or would you rather save your time and money and just buy a full ounce when you have enough to do it? Thanks for watching, guys.